Welcome back. Today we are going to see one of the important corporate actions in the US stock markets, which is nothing but Apple, uh, none other than the global giant in Apple iPhones and iPads and iMacs, and now they are into slowly getting into services industries too. So currently, the Apple has announced the stock split in 2020. Recently, they've announced 4 shares for 4:1. That is their current stock split. In the last 20 to 30 years, Apple has significantly announced stock splits too in the history. But if someone have invested in 1985, so what will be the value of that stock now, and for how many shares which he hold? Because the reason is around 30-40 years now, the Apple has made a significant stock splits at a significant time period. So whenever they feel like the market caps were reaching a peak, they have announced the stock splits. There are various reasons to it, because psychologically at the price levels, they want the price levels to be very low so that the traders find it attractive to buy and sell. So that is one reason for doing that. Even though it doesn't change the market value of the company, fundamentally that is the actual psychology behind it. So now quickly look into this Apple stock split history. I would say in around 1985, that is the 1987, that is the area where they announced their first stock split around 2:1, and then followed by 2000, and followed by 2005, and followed by 2014 and 2020. So 2014 was the region where they've announced a significant stock split of 1:1. That is obvious. The reason is the stock price was 656 at that time. That is the reason they did the stock split at that time. So now when we look at the share alone, say for example, if a person has bought a share of Apple at 1987, so you would have. Now let's look at only the shares, how many shares which he will hold now. So 1987 he might have get 2 shares, and 2000 for 2 you will get 4, since it is 2:1. Then 4 to 2 times, that is 8 shares. 8 into 7, somewhere around I would say 56. And then 56, now 56 into 4, so 56 into 4, it's almost around 200 plus shares. So someone who would have bought share for $79 in 1987, so you would have, what the value you would have been earning now. So 200 into roughly, even if it is around 100, so it's somewhere around $20,000. So $79 investment in 1987 has made a significant run up of around $20,000, which is no other company have delivered it. So now quickly looking into the current stock split, whether they justify those valuations, or how comfortable they are, how comfortable the stock will be at this levels. Let's quickly see into that factors too. So now quickly looking into the platforms. This is a TDM rate platform, which I'll be using the live platform to track the current activities. So I have an issues with the password. Let me try it again. So okay, here we go. So now, looking only into the fundamentals, the market value of the company is around $2 trillion. So their estimated value by market cap is diversified in this regions actually. The iPhone segments contribute around 41% of the company's value, services around 25.6%, watch and accessory sections around 14.2%, MacBooks around 7.2%, and iPad around 16.3%, and remaining is the cash which they hold. So of course they are a zero debt company. So this is how they have they are positioned actually. Now this is one of the recent fundamental valuations report released by one of the research agencies. So the main run up behind this 2 trillion market cap, it's due to their strong Q3 results, which is due to the COVID-19's the Apple MacBook sales jump. That is one thing which they claim. And the Intel chips, from Intel chips, they are closely moving to ARM-based chip processors. That is the second factor. And the third thing is their margin improvements, and also the services margin improvement. It seems to be climbing up slowly. Now coming into the business summary, apart from this, there are other services which seems to be interesting, which is the Apple Music subscriptions and other subscriptions which are slowly gaining value. Adding to the market value of the company. That is one thing. So now looking into this market cap, so now by end of this month, Apple will going for a stock split. So at the current price of 500 or 468, if they do a 4:1 stock split, they will be somewhere around 120 levels or 125 levels. So giving that the $2 trillion market cap company. So how well it will be, how comfortable the investors will be giving that valuations. The reason is the dividend yield of Apple is around close to 2 to 3%, or close to money market funds investments, I would say. The US money market funds return were around somewhere around 0.8%. So the Apple yield will somewhere around 2, not more than 2, I think, at this current levels. So only way the investors can earn return from this stock is through capital appreciation. I mean to say, only if the stock price is inches higher, then the investors will make money from that moment. So since the dividends are not significant, so given the fact that now they have already reached the $2 trillion market cap, which is a significant benchmark, so where the sales will grow continuously. Now the current price to earnings around 30 times will, in order to justify at the same levels, the sales and profit numbers should continuously beat the estimates, or to maintain in line to be their market leaders. So it's not the safe level to look at someone looking for long-term investment, but just looking as a fact. If someone has invested $79 in 1980s, he would have been at now 20 plus $20,000, $20,000. That's an interesting fact. Hope it helps. Thanks for watching. Let's see you in the next video. Thank you.